May you live in interesting times. It's an oft-repeated Chinese proverb meant more as a curse and a slur against someone than a wish for good and prosperity. We definitely are living in interesting times. What will come about it? What will the outcome of certain events be? I don't know. But I'm going to explore that further in this episode. So let's get started. Since the last episode, doing a recap from November of 2022, we've seen the fallout of FTX blossom into its full extent. We've seen the digital currency group fall apart. We've seen BlockFi declare bankruptcy. We've seen controversy and finger-pointing and accusations regarding GBTC, and we've seen a lot of fallout. Silvergate Bank, that recently was announced a mere 2 weeks ago they were winding down operations. Then a week later we had the SVB and Signature Bank issues. SVB being a regular bank, apparently the 10th largest bank in the United States. So that was bailed out and backstopped just because of the systemic risk that it presented. Signature Bank was closed down suddenly out of nowhere, and the excuses given are that they were not good about their documentation and record keeping, and well, that seems like hardly a reason to close down a bank. Signature Bank was behind Silvergate, a bank that was very popular for crypto-related services, for banking, that catered to them. I think there was proposed in the budget of the federal government of the United States a 30% electricity tax for Bitcoin mining operations. And then we've just seen more and more restrictions coming into place that are tightening the noose around on-ramps that people have to be able to buy and sell cryptocurrencies. I definitely think, and what my spidey sense is telling me now with the information that I have, is that this is to keep people from having access to the exit hatch, because the system is breaking. We're seeing the breaks now. Credit Suisse just this week had to get backstopped because its balance sheet got whacked. Apparently the strong hike in interest rates, a little bit of backstory going to SVB. What happens is a bank will put its reserves, it has to keep a certain amount of cash as reserves on their balance sheet, so to cover withdrawals, that sort of thing. Many banks will end up buying U.S. government debt, treasury bills, notes, and bonds. Well, the portfolio that SVB Bank had, they bought a lot of these notes and bills years ago at much lower interest rates. And it's a situation where, because, say, 5 years ago, you could get a 5-year bond paying 1%. Today it'd be paying 5%. No one's going to buy a bond with a lower yield. You have to discount the price to make up for that. So if SVB Bank had to sell its assets, they'd be selling those banks at a loss, meaning all of a sudden what was on their books, say $100 million, which if they held those to maturity, they would have $100 million because they now had to liquidate them. That $100 million would only be worth $70 million, which would mean they're grossly undercapitalized, which means they have to sell more assets, which just starts a cascade effect. Well, apparently SVB Bank did not have any hedges for interest rate risk, where, if I'm to understand it, most banks do. Most banks have some sort of financial instruments or derivatives to be able to offset any losses that can be incurred for situations like this, and SVB Bank did not do that. So it is. Janet Yellen gave testimony this week. She's the head of the U.S. Treasury, and she said that the TLDR was that we don't have a plan of how we're going through things, and I believe, this is my opinion, only the banks that pose systemic risks or within some sort of threshold of estimation of systemic risk are going to get backstopped. The rest of them are going to be allowed to just crash and fail. And then the big banks will be able to swallow up those assets at a discount, become even bigger. The end result of all this, again, as I've stated many times in various channels, is devaluation. You create more of something and it's worth less. The more abundant something is, the less it costs. That includes monetary units. What's more valuable? To use an example, having one of 100 Mickey Mantle rookie cards, he's a baseball player from the 20th century, or having one of 10,000 Mickey Mantle rookie cards. Obviously, the item that has more scarcity has more value, and that's where the value proposition of Bitcoin comes into play. You have a fixed supply, so holding on to those units, when more people start to want those units, the value of those units increases, versus the system with our monetary units now, the fiat currencies, more and more being created, and therefore the units currently in circulation that you hold in your bank account, that your house is valued in, that your stocks are valued in, that your paycheck is valued in, goes down. And that's been the main theme over the last 50 years. Once the US dollar depegged completely from gold, a gold standard, is that the monetary supply has grown, but the value behind it's not remained consistent. I think that things are being pushed so hard, so fast. I just read this morning the EU is looking to limit or put a cap in the amount of value that can be transacted, or at least a bill was put through to cap the amount of value that can be sent through peer-to-peer transactions, which would mean you couldn't use it to buy a car, you couldn't use it in business-to-business payments. The powers that be, or the agents within the halls of power and finance, are trying to put a cap, because I think as the shit hits the fan, more and more people are going to be going into Bitcoin. More and more people are going to be looking outside of their native currencies. Bitcoin this week already pushed through 27,000 for a few minutes, apparently, as the joke goes. But even then, I think as things start to fall apart more and more people, there's enough mass awareness that people are going to say Bitcoin is the way, because you can't inflate the supply, because when there's a bank run, if I still have custody of my Bitcoin, no one's taking that. Whereas the banks in Europe, you might have bail-ins. In the US, you're going to have rapidly increasing currency devaluation as more money is created for backstops, and there's a crisis of confidence. That trust just evaporates. And I think I don't know where things are going. Using all of the information that I can scour from different sources, this could be it. This could be it. This could be the thing that people have talked about for 30 years, where things break and fall apart, and the old monetary networks finally end up, people say enough, and something new has to be created. I don't know. I really don't know. So, we'll see how that unfolds. I did have some notes, little side notes I'll throw in. When we're looking at companies that are at risk, looking at banks, say such as like Silvergate and Signature Bank, the next domino I could see falling would be something with the companies which I call infrastructure companies. BitGo, Fireblocks, Prime Trust. These are companies that perform custodial services for other companies such as exchanges. For a while it was with Abra, for Strike, for Swan Bitcoin, and I'm sure there's numerous others where these apps and services are more or less the interactive face that you have when you buy and sell and trade cryptos and take out loans, or you put up your crypto to earn interest. And if these get taken down, a lot of on-ramps are going to be just funneled into a much narrower and narrower chokehold, where it's going to be limited to a few exchanges, and those exchanges are going to be able to be regulated, controlled, and you bet your ass when the federal government comes to Coinbase asking for transaction records of its client base for the previous 5 years, they're not going to have any more wiggle room to say go pound sand like they did back in 2017. So now is a time where if you can accumulate some digital assets, some Bitcoin, do it. It wouldn't hurt. This isn't financial advice, and you should really do your research. But everything I've seen in the last 5 years, if you were a friend of mine, I'd say, well, it wouldn't hurt. Don't go crazy, but it wouldn't hurt. On the infrastructure with Abra, as far as them being exposed to a third-party risk through Prime Trust, apparently, back in September, October, they announced they were going to be developing their own bank, Abra Bank. And I think the whole idea was to reduce and eliminate that particular third-party risk. So now, if there's any risk, it's an all-or-nothing proposition. Either Abra is able to perform operations, or it completely tanks, and there is no more Abra. So, measure the risk as you will. Well, that took a different direction than I thought it was going to take, but given events of the last few days from when I realized I need to make a new pod to when this got recorded, systemic risk became a much bigger theme. So keep your eyes open. Use your discernment to sort between the wheat and the chaff. Know what's truth and what's just obfuscation and lies. And be well. Talk to you soon.